Let me guess, you clicked this video because trading 40 hours a week for 40 years in exchange for a gold watch and a good luck card feels outdated. And deep down, you suspect there's a smarter way to live. You're right. Because today, we're diving into two ETFs that could do more for your wealth than any full-time job ever will. We're talking monthly income and millionaire-level growth. No day trading, no stock picking, no sacrificing goats under a full moon for alpha. Just a brutally simple two-fund strategy that works even if you sleep through CNBC. And as always, this is not financial advice. It's for education and entertainment purposes only. Now let's make Wall Street weep. Let's kick this off with a little reality slap. The average American spends their entire life working a full-time job and ends up with, drumroll please, about $244,000 in their 401k at retirement. That's enough to maybe retire, if your dream retirement includes stress, soup cans, and roommates. Compare that to this. Investing just $10 a day in two ETFs could land you with a $2 million portfolio and $17,000 a month in income. Sounds fake? It's not. It's math. And it's what we're breaking down today. Because now we're about to meet ETF number one, your loyal cash-generating machine that doesn't sleep, doesn't complain, and shows up to work even when you don't. Meet your new best friend, SCHD. Full name, Schwab U.S. Dividend Equity. ETF nickname, the Dividend Monster. Because this thing eats boring bank savings accounts for breakfast and burps out quarterly cash. SCHD isn't just any ETF. It's a carefully curated squad of high-quality, dividend-paying U.S. companies. We're talking about household names with strong balance sheets, consistent cash flow, and a habit of sharing the wealth. And when I say dividends, I mean the kind that show up like clockwork, even when the market throws a tantrum. Let's get nerdy for a second. SCHD has a current yield of around 3.5% to 4%, depending on the year. That means for every $10,000 you invest, you're looking at $350 to $400 per year in cold, hard, passive income. That's a couple of bills paid just for owning shares, and it compounds over time like a financial snowball on steroids. And the best part? This isn't some weird high-yield trap. SCHD focuses on dividend quality, companies with at least 10 years of consistent dividend payouts and strong fundamentals. Translation: these aren't sketchy yield chasers. These are companies that pay because they can. You want monthly income? SCHD pays quarterly, so just set up a budget, rotate it in, and boom. You're getting paid to exist. It's like financial royalty checks without the awkward acting career. Oh, and performance? SCHD has held its own with a 10-year average return around 11%, combining dividend yield with capital growth. Not bad for something that doesn't require day trading, meme stock prayers, or watching CNBC until your eyes bleed. So yeah, SCHD is that dependable, low-maintenance partner who brings home the bacon and reinvests it for future bacon. But what if you're more growth-minded? Less mailbox money and more ride the market to the moon type? Perfect. Let's meet ETF number two, the one that lets you hitch a ride on the stock market rocket while SCHD holds your parachute. Let's talk about the second ETF in this dynamic duo, QQQ, aka the growth rocket. Think of SCHD as your calm, collected grandpa handing you dividend checks every quarter. QQQ is your over-caffeinated tech bro who turns every dollar into a moonshot. QQQ tracks the NASDAQ 100, which includes the top 100 non-financial companies in the NASDAQ exchange. We're talking Apple, Microsoft, Nvidia, Amazon, Meta, and Tesla. Basically the Avengers of innovation. Now here's the kicker. This thing has been printing returns like it owns the Federal Reserve. Check the receipts. 1-year return, 15.47%. 5-year return, 122.05%. 10-year return, 381.11%. And an average annual share price return of 16.78% over a decade. So let's say you toss just $10 a day into QQQ. Over 30 years reinvesting dividends and letting it ride? You're looking at a portfolio worth over $2.36 million. And that's not hypothetical, that's historical math. But wait, you say, what about dividends? Sure, QQQ isn't a cash cow like SCHD. The dividend yield is a modest 0.58%, barely enough for a coffee. But that's not the point. This ETF doesn't hand you money, it builds it. QQQ reinvests, scales, and innovates. It compounds wealth so you can buy the coffee shop instead of just the coffee. Now here's the strategy. Pair QQQ with SCHD. Let SCHD handle the income. Let QQQ skyrocket your capital. Together, they're like Batman and Superman. Or more accurately, dividends and growth. One pays you now, the other makes you rich later. And if you're worried about volatility, good. That means you're paying attention. Tech can swing hard, but over time QQQ has proven it can fall, recover, and keep climbing like a caffeinated squirrel on a power line. So SCHD is your paycheck. QQQ is your future freedom fund. And now that we've strapped a rocket to your retirement goals, let's bring it all together with the final combo strategy. Buckle up. One ETF feeds you, the other frees you. But what makes this strategy actually work? The finance world wants you confused. Why? Confused people make terrible money decisions. They panic, overtrade, chase trends, and blow up portfolios. But here's the truth. 80% of actively managed funds underperform the market. And people like Warren Buffett, Jack Bogle, and every other investing legend agree on one thing. Keep it simple. Keep it steady. SCHD and QQQ don't try to beat the market. They are the market. They're low-cost, diversified, and consistent. They don't promise the moon, but they will deliver the bag. So how were these two ETFs handpicked? It wasn't just vibes. Before we picked these ETFs, we asked 5 key questions. Track record. Does it survive downturns or panic like a toddler on a sugar crash? Dividend yield. Are we talking steady checks or penny scraps? Dividend growth. Is that income scaling over time? Share price growth. Is it compounding like a beast? Holdings. Quality. Are we dealing with real companies or speculative TikTok bait? SCHD and QQQ check all the boxes. It's like Batman and Superman. Totally different powers, same goal. Protect your financial future. But what if you only want income or only care about growth? Let's break that down. If you want to retire early and live off dividends, lean heavier into SCHD. Want to maximize future wealth and don't need income yet? Go QQQ heavy. Want both? Try a 50-50 split. That gives you current income and long-term growth. As your needs change, adjust the ratio. It's flexible, low maintenance, and actually kind of fun to watch grow. And if you're wondering what $10 a day really buys over time, buckle up. $10 a day. That's a coffee and a muffin. A Netflix subscription you don't use. A very confused Uber ride. Now watch this. $10 a day into SCHD equals $1.79 million, plus $17,000 a month income by year 30. $10 a day into QQQ equals $2.36 million portfolio. Capital gains, baby. Together, you're sitting on over $4 million in assets, just by being consistent, boring, and not touching your phone every time the market sneezes. Now, before you throw your whole paycheck into ETFs, remember ETFs are safer than single stocks, but not risk-free. Markets crash, dividends get cut, tech companies stumble. That's why diversification is key, and why you should never invest money you can't afford to keep in for at least 5 years. Start small. Stay steady. Reinvest everything. Time, not timing, is what builds empires. So let's wrap this up before your brain explodes from all the wealth potential. You don't need a fancy finance degree or a 6-figure salary to retire rich. You just need a plan, 2 ETFs, and the willpower to stay consistent while everyone else is panic selling. So if you're ready to stop trading your time for money and start making your money work overtime, slam that like button, subscribe for more no BS money content, and turn on the bell so you never miss a drop. This is the strategy. This is the moment. And this beats working 9 to 5. See you in the next one, and until then, keep stacking smart.